Welcome back. Slumping productivity, job losses, tariffs. There is plenty of concern about Canada's economy as we head into 2026, but is there room for some optimism? Deloitte Canada has released its winter outlook for the economy. Joining us tonight with the results, Dawn Desjardins. She's been on the show before, chief economist with Deloitte. Nice to see you.
Nice to see you.
Do you see a growing or weakening economy for Canada?
Well, on balance, it'll be a little softer than it was in 2025. But I think when we think about how it's going to play out, we're anticipating slow growth to start the year. So not a lot of good news there. But as we go through the middle part of this year, we're going to have that review of our Canada-US-Mexico trade agreement. And we think that review will yield sufficient results that are positive for Canada, meaning we'll retain most of our goods going south of the border tariff-free, that this will restore business confidence. And once that happens, we expect to see some improving momentum in our economy.
What gives you optimism about the CUSMA negotiations? Because there's a lot of folks who don't share your position on that.
Yes, absolutely. Well, I think it is increasingly clear that U.S. businesses are relying on Canadian exports. And because of that, we do feel that that is going to be persuasive enough for the administration to actually proceed with this agreement that we have. Now, will the agreement look exactly the way it looks today? I would think not. There are irritants that the U.S. administration points to all the time, so there could be some changes. But I think in the main, and this is what we're really expecting, is that we will continue to have access to that U.S. market.
Well, that would certainly be good. There was lots of talk last year about recession. Have we put that term to bed for the coming year?
We have. Now, there's a few things that have changed, I think, that also support economic growth. One of them being that we have lower interest rates than we've had. And we do think that those lower interest rates will help. They'll help households who are going to have to renegotiate their mortgages. Remember, a lot of the mortgages that were 5-year mortgages struck in 2021.
Yeah.
Yes, they're coming due, and they were at really low rates. But now that differential is not nearly as great as when we had the 5% overnight rate. So we think that's going to be constructive.
I know you look at the provinces. Let's break it down a bit and look at the Maritimes. As a region, how do we look?
Well, I would say a little bit slower than what we saw in 2025, and that's just in keeping, right, with the rest of the country. Again, that changes we've seen to our immigration policy, that population growth that were really giving us a lift and helping us, well, that's not going to be there this year. So to the extent that that's having an impact, it's going to be to a slower growth. I think when we think about other things, though, that we are seeing investment activity in many different projects, and we're hearing about investments that potentially are in the hopper. I think these are going to be, offsetting some of that softening we're seeing in terms of the consumer side.
So are you talking about the big projects, those so-called national projects like the Sisson Mine in New Brunswick or Wind West in Nova Scotia?
Exactly that, and as well as, provincial governments are also involved in putting money to work. So all of these things, as well as some supports for industries that are facing those very onerous tariffs, to the extent that those industries are having some support, it just prevents a real downward push on those industries, and that it doesn't ripple out into the rest of the economy.
So that's kind of the look from, say, 10,000 feet. But how does that translate into everyday lives and every household financial situation?
Well, when we're thinking about that, as we've already spoken about, we do have some, I wouldn't say relief, but certainly less pressure on household balance sheets from these mortgage renewals. We think inflation will remain around 2%. So it means that prices are going to go up by 2%, so not 8%, 2%, still going to move up. So that could have some strain for some households. Now, on the labor market, certainly we have seen some softening in terms of the labor market. And what companies are saying is they're saying, well, I'm not really looking to slash my workforce. but at the same time, I'm not necessarily looking to add. So in the near term, I think when we're looking at the household side, we're going to continue to see some nervousness. We're not seeing a huge amount of growth in terms of the labor market. And so to that end, it will keep, I think, consumers more cautious.
So
as
Sorry, I just was curious now if that you think that means that people will be more apt to hang on to their jobs or less movement perhaps within the
Yes.
market.
Yes, exactly. It's not that we're anticipating huge layoffs across Canada. That really isn't what we're hearing about. What's seeing. I mean, certain sectors, of course, certain industries are under significant pressure, but by and large, we think the labor market it's softer. When we look at how many jobs are vacant per unemployed worker, they have come down significantly. So not seeing a lot of hiring activity, but at the same time, not looking wholesale job losses either.
Dawn, we'll have to leave it there. It's an interesting report. People can see it on our website through the link that we're putting up. And I want to thank you for your time as always. Good to talk to you.
Good to talk to you. Thanks so much.
We'll take a break. We'll be back with more of your newscast in 2 minutes.